Depends on your age and depends on your risk tolerance. I said in the book, I thought if you didn't have at least 25% of your assets in sound money, you were going to experience regret. I obviously have a lot more than that, and I think a lot of people should have more than that. If you're older and you can't handle a drawdown, you might need the money within a 5-year window. Having 100% in Bitcoin, that doesn't make any sense. You could have a big drawdown and you'd have to pull it out at a low value. You want to do that. So it kind of depends on when are you going to need the money, right? So I think everybody has to figure that out for themselves.
Hey guys, welcome to Everyday Finance. In his explanation of the role of the United States dollar as the global reserve currency, Larry Lepard highlights the economic power and influence that the dollar possesses in the market. In light of the ongoing developments in the cryptocurrency world, where Bitcoin is currently facing a crucial week, this provides important context for those developments. There is a possibility that the leading cryptocurrency will close below the significant support level of $882,000, which could result in leveraged long liquidations amounting to more than $1.13 billion. The sentiment of investors has been shaken, particularly after the disappointment that was caused by the creation of the United States Strategic Bitcoin Reserve, which was created by an executive order by President Trump. Due to the fact that this reserve makes use of cryptocurrency that has been forfeited rather than actively purchasing Bitcoin, many investors are hoping for stronger institutional backing. Watch the video.
Yes, I do. It's complicated, but I do think it's feasible. I mean, I think we need a monetary reset. Full stop. Okay, we are in a sovereign debt crisis. There's too much debt. There's not enough GDP. We need a monetary reset. Okay, how that takes form, this is brain surgery. This is complicated. Okay, and I don't have the answer, and I don't think anybody has the answer. But what it does mean is it means you've got to go back to some form of sound money as the base layer. Bitcoin is the right choice. Gold is inferior, but it's a better choice than fiat. Okay, and yes, if we start buying Bitcoin, that's going to shove the dollar down. Okay, which we need. That would create more exports for us and it would make our imports more expensive. It would harm China, but that's a good thing. China's taking advantage of our industrial Midwest. And yes, I mean, what she's talking about is brilliant. I think Trump and Bissett kind of understand this. Okay, now in the paths, I mean, there are a million paths as to how we get there. Okay, and I don't know, and I can't foresee, but when I invest, I'm not a trader. I don't invest month by month. I invest year by year, and I really invest 5 years by 5 years and decade by decade. And so I'm looking to protect my savings, for when I'm 80 or 90 or for my kids and stuff. And I just know that all roads lead to inflation.
Yeah,
they all lead. And so
they have to print. Nothing stops this train.
Right. And so in what form or manner, I don't know. And by the way, it's going to be volatile. I mean, there's a chart in here. There's Dan Oliver's brilliant, Weimar chart that shows the price of gold monthly during the Weimar hyperinflation. I mean, example, we could have an enormous stock market crash. Okay, there's some people think that they're going to engineer that to hurt Trump. Okay, we could have an enormous stock market crash. And in 2020, when the stock market crashed, Bitcoin got hit hard, gold got hit hard. Right? Powell came in on a Monday morning and said, we're going to print until our eyes bleed, basically. And gold took off like a rocket. Bitcoin took off like a rocket. But, if you panicked on that downturn, you got blown out. So one needs, and I try in the book to explain that, one needs to understand the nature of these assets and understand that, and you've been in this long enough, I've been in it long enough, I know this stuff can go against you.
Yeah.
I owned a bunch of these things. I bought them at 17,000 in 2017, and I watched them go to 10, and I watched them go to 4.
Yep. And I bought one at 69K at 21 in 21.
I did too.
And it was terrible.
I did too. I did too. But you know what? I bought more at 15. In 22 after SBF. So you got to take a long-term perspective. I mean, the changing of a monetary system, which is what we're in, it's going to be a volatile event. Depends on your age and depends on your risk tolerance. I said in the book, I thought if you didn't have at least 25% of your assets in sound money, you were going to experience regret. I obviously have a lot more than that, and I think a lot of people should have more than that. If you're older and you can't handle a drawdown, you might need the money within a 5-year window. Having 100% in Bitcoin, that doesn't make any sense. You could have a big drawdown and you'd have to pull it out at a low value. You want to do that. So it kind of depends on when are you going to need the money, right? So I think everybody has to figure that out for themselves. But let me make another point about the whole thing that I think is a very important point to make, and the book makes it, but I want to make it here because I think it's very important people understand. It was funny, when you write one of these books, you do research and you learn things and things pop into your head that you hadn't thought of before. investing, and so there are a lot of rules of investing. They're tried and true. They've been around a long time. There are a lot of great books written, Graham and Dodd. They're brilliant. There are thousands of brilliant investors, millions of brilliant investors who've done well over the years. And it's very seldom that the rules change, but the rules have changed. And let me describe that. The rules have changed in the following way, Nico. We now have investments dominated by Metcalfe's law. Metcalfe's law says that the network grows in value at the square of the underlying number of users. So I was trained, at business school to invest in things based on multiples of cash flow and growth and PEG ratios and all the standard stuff, Sharpe ratios, all that stuff. And therefore, when the internet came along, and I invested in the internet, and I benefited from the growth of that, but like I was looking at Amazon and I was looking at Facebook and I was looking at Google, and I could never get past the valuations. I put valuation tests on these network businesses. I said, they're too expensive for what they are. They don't have enough profits to justify this valuation. I missed it, okay? Here's what happened. Amazon, since its IPO, is up 218,000%.
Yeah.
Google, since its IPO, is up 9,000%. Facebook, since its IPO, is up like 2,000%. General Motors, since its IPO in 1916, is up like 400 times, okay? It's great. It was a great investment, okay? If you held GM through all those years, you did fine. My point is, it's only 20 years the internet's really been active since, right? In 20 years, because I consider broad internet usage was 2000. It started in 95, but broadly it was 2000. So we're 24 years into the internet, and you've got network businesses that have gone up thousands of percent.
Yeah.
This is different.
Yeah.
This is a really different set of rules, okay?
Yeah. That trend isn't going to stop.
No.
Yeah.
So what does that tell me? I want to invest in network businesses. Well, or network things, right? What's the biggest network thing right now? Jesus Christ.
It's obvious.
Right? Yeah.
Yeah.
It's just so obvious, right?
Yeah.
I mean, I think it's very important for people to get out of that traditional investing mindset and think in those terms.
Bitcoin's price momentum has been dampened as a result of the market's negative reaction to these regulatory actions, as well as concerns regarding global trade and mixed signals within the macroeconomic environment. The technical indicators of Bitcoin, such as a relative strength index, RSI, that is low, lend credence to the notion that the asset is currently oversold. In light of the fact that the market is still being shaped by developments in economic conditions and regulatory policies, the upcoming week will be extremely important for Bitcoin. A closing price that is higher than $882,000 may indicate that investors are regaining their confidence, whereas a price that is lower than that may result in significant volatility and stronger market corrections. Watch some more clips.
What I believe, but I think the money breaks and then the spirit breaks, but that leads to, there's each incremental step, and the steps just got worse and worse and worse. And, like as an example, when we were on the gold standard, I mean, they suspended specie payment in 1812. The money broke, but they fixed it and they got back on the gold standard, and, things were okay again. And we had a lot of experiences like that, including the Civil War where they printed greenbacks. But, we kept going back to what we knew, which was sound money. And the bimetallism wars were fought over that. All the free silver guys wanted less sound money. All the gold guys wanted sound money. And we stayed with sound money, but then, the Fed came along and it backstopped the banks. And then, and it just, the snowball got really, really rolling, later on. I mean, if you look at the history of America, I mean, the monetary system was never perfect, but it was better than it is now.
Absolutely.
By definition. Yeah.
Yeah. No, it's a very kind of interesting phenomenon. Like you can
they go hand in hand.
They go hand in hand.
Yeah, I mean it is chicken and egg. I mean, it's kind of like each one of them is a top this. Do you know what I mean? I mean, derivatives, right? For example, I mean, Phil Gramm lobbied to change all the derivatives law, which allowed Enron to vaporize $78 billion worth of assets. Do you know what I mean? And she was on the Enron board, and she was getting paid, $1 million a year to sit on that board. I mean, it's just, again, insiders changing the rules, doing stuff to benefit themselves, breaking the money, right? So let's talk about the federal government's finances, right? The federal government collects taxes, and the federal government has expenses. And some of those expenses are very much locked in. Social Security and Medicare are kind of set on autopilot, and they adjust upward with CPI. Some of the are more discretionary, like defense, but frankly, it's pretty locked in as well because all the defense contractors have Washington by the throat. Basically, these things are costs that we endure. And by the way, one of the biggest wastes of federal spending, in my opinion, in the last 20 years was all the wars post 9/11. I mean, we wasted $8 trillion in the Middle East, fighting, securing oil, for other people and ourselves, and, grabbing Afghanistan and giving it back. I mean, we just wasted $8 trillion. It's terrible. But Dick Cheney's rich. I mean, he made $100 billion, in Halliburton. So set all that aside. The federal government balances these two. And when COVID came along, the expenses went up a great deal and revenue didn't. And so the deficits really widened out. And one would have thought the crisis was over, they'd cut back the expenses, but they didn't. And so we started running bigger deficits. Well, as you know, when you run a deficit, it has to be financed. The government has to figure out a way to pay for the deficit. So what do? They issue debt in order to have the cash to make the expense payments that they're making. So that debt gets added onto the national debt, which has been growing incredibly quickly, as we all know. And that debt needs to be serviced. There's an interest cost to that debt. And so the bond market, which buys that debt, pays that interest. And the bond market is comprised of savers who want to buy debt to get an interest rate. They're trying to conservatively save money and get interest on it. And so what happens is, as the debt gets bigger and interest rates go up, the interest cost of the government goes up a lot. So the interest cost of the government 5 years ago was $400 billion a year. Right now we're running at $1.4 trillion a year. Well, last year the deficit was $1.8 trillion. So a big part of the deficit is the interest cost on the debt. If the deficit gets bigger, what do? You sell more debt. Okay, you sell the debt into a fixed size market. What happens? There are only so many buyers. They need a higher price interest cost in order to want to buy it. So the interest rate goes higher. So now you got 36 billion that's not just paying $1.4 trillion, maybe they're paying 1.8. Well, that's going to get added to the deficit. Well, how are you going to finance the deficit? You're going to issue more debt. Well, the more debt gets, and it becomes a doom loop, right? Bigger deficit, more debt issuance, higher interest rates, bigger deficit.
Can't stop this train. Nothing stops this train.
Right. And I got permission from Lynn to use that as a chapter. I mean, there's a chapter called Nothing Stops This Train, which was a brilliant meme, by Lynn Alden that describes that process. And so Doge comes along, and, rightly so, and I applaud all of their efforts. They are going to try, and they found some really stupid expenses. They're going to try, and they will. They will cut expenses. But here's the thing, Nico. They've got a really, really hard task, okay? The deficit is 1.8 last year, and it's now running closer to like 2.4 if you annualize the last couple of months. What we're seeing is that's going to be really, really hard to cut, because 80%, if you take Social Security, Medicare, defense, and interest, you've accounted for 80% of the budget. So even if you if you cut the last 20% to zero, which you can't, you wouldn't balance it. So you've got to go after, and you try and cut Social Security and Medicare, that's the third rail. No politician's going to go for that. Defense guys, they're pretty powerful, and the interest rates are really high. Now, what they could do is they could do financial repression, and I think that's what they're going to force to do. They're going to be forced to do yield curve control. The Fed, in spite of inflation not coming back to 2%, you've seen them already calling for this. Some people saying, well, it's in the book as well. Well, maybe we should have an inflation target of 3 or 4%. They're going to be forced to keep issuing the debt and hold the interest rate below the neutral rate. And that interest rate will at least bring that 1.4 of interest expense down, and that'll help a little bit. But the point is, yield curve control, how do they do that? That means they are buying the debt themselves, which then means their balance sheet is getting bigger, which then means the supply of money in the system is getting bigger. And what's that? That's inflation, okay? As inflation gets bigger, the bond market is devised to give a return over and above inflation. Higher inflation, the bond market says, I'm sorry, I'm not buying that unless you give me this rate. Eventually, the Fed could be sitting there with their balance sheet saying, well, we're going to cap the yields at 4%. The entire bond market could look at it and go, 4%? I don't like that. Sold to you, right? And $36 trillion.
Yeah.
They could sell to the Fed, which has got a $7 trillion balance sheet, right? So suddenly you've just grown the money supply by that amount. That's hyperinflation.
But something's got to give.
Something's got to give.
Something's got to give.
Something's got to
give.
give.
But you just can't put a timeline on it.
No, you can't. You don't know how it's going to give. You don't know the form it's going to take. But what we do know, Nico, is it's leading to the big print. There's no other way out. And that's why I wrote the book, because I want to get up on a soapbox and scream at the entire goddamn world. Wake up, guys. Wake up. This is going to happen.
Yeah.
Protect yourself now.
Yeah.
Because there's not going to be a do-over.
Yeah.
Right?
And if you're in Bitcoin, the big print is going to make...
We're going to $1 million a coin.
Yeah.
Gold's going to 10,000.
Yeah.
Right?
Yeah.
I mean, it's nuts.
Yeah.
It's absolutely nuts. Well, I'm really excited to see all of us winning. And I'm excited to see Bitcoiners winning, and I'm excited to see new people coming into the fold. And, I've told some stories. I mean, I was in a Whole Foods in Framingham, Mass in December, I was walking around. There was a guy in northeastern Massachusetts. There's a office supply store called WB Mason. They deliver. They have trucks. There's a guy in there walking around with a WB Mason uniform on. So he's a delivery man. Walks up to me and says, "Are you Larry?" And I'm like, "Yeah." And he says, "Dude, I've been watching your videos for 5 years. I started stacking 5 years ago. I got a pretty good stack." He gives me a big hug. He says, "You changed my life. You saved my life." It's the guy who drives a truck.
Yeah.
Okay? And I'm kind of like, oh man, we need more stories like
Yeah,
that, right?
yeah.
I want that story repeated 1,000 times.
I love that.
You know what I mean? That's what I'm helpful for. The other thing I would say that my biggest and longer term, my biggest hope for Bitcoin is that it ends the wars.
Yes.
It's just people innocent people in faraway countries have gotten killed for no good reason.
The founder of MicroStrategy, Michael Saylor, has put forth a bold proposal for the establishment of a strategic Bitcoin reserve by the U.S. government. According to Saylor, the United States should purchase up to 25% of the entire Bitcoin supply between 2025 and 2035, bringing its total holdings to almost 5.25 million BTC by the time 99% of all Bitcoin is mined. He advocates for a long-term hold strategy and advises the government to never sell Bitcoin, as outlined in his paper, A Digital Asset Strategy to Dominate the 21st Century Global Economy. By 2045, Saylor thinks this plan could produce more than $1 trillion a year, which could reduce the national debt and provide future generations with a source of prosperity. Saylor's plan stands in stark contrast to other proposals, such as Senator Cynthia Lummis's proposal to purchase just 5% of the entire Bitcoin supply. His proposal to give the U.S. government a quarter of the Bitcoin market represents a daring break from conventional financial practices. Saylor's proposal is seen as part of a larger movement to reshape national finance and economic policy, positioning digital assets as a key player in the future of the American economy, as the government also considers a stockpile of digital assets financed by seized cryptocurrencies. Thanks for watching.